Have you ever wondered why Bitcoin, the world's first and most popular digital currency, is so volatile? Let's dive into it. At its core, Bitcoin is influenced by a plethora of factors. Market demand plays a significant role. When demand surges, so does Bitcoin's value, but when it wanes, prices can fall dramatically. Regulatory news is another key factor. For instance, when the Securities and Exchange Commission, or the SEC, shows leniency towards Bitcoin, prices can skyrocket. But a more stringent stance can lead to a sharp drop. Technological advancements also play a part. Innovations that make Bitcoin more accessible or useful can push its value up, while issues like security concerns can drag it down. Now let's talk about the high-risk, high-reward nature of Bitcoin. Its volatility can mean significant profit for some investors. Yet it can also lead to substantial losses. It's much like a roller coaster ride, full of ups and downs, twists and turns. Despite its volatility, Bitcoin has been a game-changer in the world of finance and investments. Bitcoin's journey from a niche interest to a globally recognized asset has been nothing short of phenomenal. This digital currency, conceived in the mind of a mysterious figure known as Satoshi Nakamoto, has traveled a roller coaster ride since its inception in 2009. Imagine, if you will, a world where financial transactions are not controlled by banks or governments. That was Satoshi's vision when he, she, or they wrote the Bitcoin white paper, introducing the concept of decentralized finance to the world. Fast forward to 2010, when the first Bitcoin transaction took place. A man named Laszlo Hanyecz made history by buying 2 pizzas with 10,000 Bitcoins. It was a milestone that marked Bitcoin's first step into the world of tangible goods and services. The year 2017 was another landmark year for Bitcoin. The cryptocurrency hit an all-time high, reaching nearly $20,000 per unit. This meteoric rise attracted global attention, not just from tech enthusiasts but from mainstream investors and businesses too. But as with any journey, there have been bumps along the road. After the giddy heights of 2017, Bitcoin experienced significant market corrections. By December of that year, the value had plummeted by more than 80% from its peak. Yet even with these market fluctuations, Bitcoin's journey continues to captivate the world. Today, businesses from coffee shops to multinational corporations are accepting Bitcoin as a form of payment. It's a testament to the resilience and adaptability of this groundbreaking digital asset. Through all its ups and downs, Bitcoin has remained a fascinating study in the power of decentralized finance. A new chapter in Bitcoin's journey unfolded with the approval of the first US Bitcoin spot ETF. What is an ETF, you ask? An exchange-traded fund, or ETF, is a type of investment fund and exchange-traded product that tracks the price of an underlying asset or group of assets. In this case, the asset is Bitcoin. The significance of this approval cannot be overstated. It opens up a new avenue for retail investors to participate in the Bitcoin market without owning the cryptocurrency directly. It also provides potential for greater liquidity, meaning Bitcoin can be bought or sold in larger amounts without significantly impacting the price. This approval didn't come without its fair share of regulatory hurdles and concerns. The Securities and Exchange Commission, or SEC, had previously rejected numerous applications for Bitcoin ETFs over concerns about market manipulation and the inconsistent treatment of Bitcoin investment vehicles. The approval indicates a change in the regulatory climate, suggesting a growing acceptance and understanding of digital currencies. However, it's important to remember that the approval of the first US Bitcoin spot ETF is not an endorsement or guarantee of Bitcoin's value. Bitcoin remains a highly volatile asset, with price swings that can be quite dramatic. The ETF approval may add a layer of legitimacy and accessibility to Bitcoin, but it doesn't eliminate the inherent risks of investing in a digital currency. While the Bitcoin spot ETF offers a new way for investors to get exposure to Bitcoin, it is not without its challenges. For one, the ETF tracks the spot price of Bitcoin, which can be highly volatile. This can lead to significant price discrepancies between the ETF and its underlying asset, particularly during periods of market stress. This is a risk that investors must be aware of when considering an investment in the ETF. The approval of the first US Bitcoin spot ETF marks a pivotal moment in the evolution of digital currency, potentially paving the way for broader acceptance and usage. As with any investment, Bitcoin comes with its own set of risks and rewards. Its high volatility has been a cause for pause, urging potential investors to tread lightly. Experts advise starting small, with a Bitcoin allocation of just 1 to 3% of your overall portfolio. This allows you to monitor price movements, gauge the market, and adjust your strategy accordingly before making larger commitments in the new ETFs. While Bitcoin offers exciting potential, it remains a risky investment that requires careful consideration and management. If you found this video helpful and are now more informed about the world of Bitcoin, we'd appreciate if you could leave us a like. Your support helps us create more content like this. We're interested in hearing your thoughts too. What do you think about Bitcoin ETFs? Are they a game changer or just another risky investment? Leave your comments below, and if you haven't already, make sure to hit the subscribe button. We regularly put out content on personal finance that you won't want to miss. Thank you for watching, and remember, knowledge is the first step to wise investing.